RBI earlier this week released stricter draft rules on gold loans under which it proposed 75% loan-to-value ratio, along with tighter valuation, purity norms and audits. My colleague Ritu caught up with VP Nandakumar, Managing Director and CEO at Manappuram Finance, to talk about this and more. Listen in.
The RBI has issued draft circular, which contains around more than 70 points, 70 items. So many of these have been already implemented by NBFCs because in our earlier interactions also, and inspection also, they wanted some of these to be implemented, which has been implemented. We had several rounds of discussion. So with this, we have implemented a major portion of that. So first of all, we welcome that because if you take the history, the regulations, when these are actually taken up, these are proposed or implemented, initially people, the regulated entities used to feel some element of pressure. But later what we have seen is these all have been very beneficial to the regulated entities. For example, this 20,000 rupees all in a check only with no cash payment, all we have implemented, and that has made the business really safe. To the question of these new guidelines, we welcome that, and some of the things, there are some element of challenges while implementing initially, but that is good to turn out to be good for the industry. And we believe that these are going to be, these regulations will be applicable to all the regulated entities, including banks, so that definitely there is level playing field. And for risk management, especially in an era of rising prices, this will turn definitely positive for the industry.
Well, Mr. Nandakumar, you said there may be some initial challenges. What are these challenges that you anticipate? And also, when RBI now says that 75 LTV is to be computed on the total repayable amount at maturity versus what you sanction at origination, and this has to be done on an ongoing basis, will you have to reduce your LTV to meet RBI's norms, or what is typically your LTV at the time of dispersal?
If these are implemented across the industry, banks and non-banks, that is what is available. So there is definitely a level playing field. All the entities will have to comply with that. Then it is not going to impact the business.
Okay, you spoke about how the rules are being harmonized between banks and NBFCs. But, over the years, NBFCs have really differentiated themselves from banks, because of the quick turnaround. But with this kind of harmonization, more rigorous appraisal processes, end-use checks that you'll have to put in place, do you see this for the industry eroding some of the edge that the NBFCs enjoyed, at least in the short term? And could it weigh on growth while the businesses adjust?
So what I feel is it is not going to impact the growth, a reasonable growth of the industry is possible with that, with risk management to be, the lending will be safe and the confidence for the stakeholders will definitely increase. So there are some processes. That processes will have to be followed. That process will be followed by all the entities. It will be made uniform. So from the business angle, I don't think it is going to impact the business. But from the customer side angle, when these were not there in the past, so far it is not there. So when these questions are asked, there will be some process difference, and the turnaround time also may slightly go up.
Quickly, Mr. Nandakumar, also on the priority sector guidelines that recently came out, RBI's decision to exclude gold loans that are originated by NBFCs and then acquired by banks from being classified as PSL, will this to some extent end up increasing the cost of funds for lenders like you? Could it dent profitability as a result?
These guidelines concerning PSL, that may be neutral as far as NBFCs are concerned.
quick word on Ashirvad Microfinance as well. RBI had earlier lifted restrictions on the company in January. How soon do you expect the business to bounce back, return to profitability? And any thoughts on, if at all, you may revisit the IPO plans for the company?
The IPO plans are not the agenda in the very near future, but definitely we will explore that when the things are normal. We are coming back to the normal dispersal slowly. It has not been fully geared up. We have implemented all the guardrails set by the SROs, so it is steadily increasing. So I hope in another 1 quarter it will go back to the normal level of dispersal.
Okay, and when do you expect them to return to profitability in that case?
So in 2-3 quarters, we expect the profit. It will return to profitability.
All right. Mr. Nandakumar, we have to ask you, one of the biggest changes for the company has been that recent deal with Bain. They will become the joint promoter. How does life change? What will Manappuram 2.0 under Bain look like? Will there be any strategic change, portfolio diversification? What sort of changes should shareholders expect?
So this money is expected to use one for totally digitalizing, then definitely for strengthening the non-gold verticals also, strengthening the capital base of our subsidiaries. Also, now in the new draft, the restriction for opening the branches for the need for getting prior approval for the branches these are expected to go. So we will get the opportunity to open more branches. We may open around 100 to 200 branches in the next 1 year, etc., etc.
Yeah, Mr. Nandakumar, you also spoke about the board, of course, getting reconstituted, and you yourself will also transition from CEO to non-executive chairman and mentor. What is the roadmap for this succession? How soon will a new CEO also be named?
We are in the process of shortlisting the CEO candidate. We are in discussion, and I hope in 3-4 months' time such a candidate will be onboarded. And as the mentor and chairman of the board, I will definitely support him in his endeavor in building Manappuram 2.
All right, that's Mr. Manappuram talking about the gold financing business in the light of new regulations. We'll take